Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Hope you all had a great weekend, and welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. We got a lot to talk about today. We're going to talk about naked shorts and the prevalence of that or not in AMC. Biogen is moving ahead of that FDA decision that we expect is coming, frankly, any time now, today or tomorrow. We are expecting to get that Biogen news. So we're going to talk about the stock into that. A lot of crypto news over the weekend coming out of that conference down in Miami. We'll talk about that. We do have an M&A deal as well. We can get there if we have time. Two guests. We also have the Russell reconstitution for Friday. So maybe AMC and GameStop are joining the Russell large cap, the Russell 1000 index. Maybe. We'll find out in a few weeks. Two guests on the docket for today. First up at 8:35 is Tim Quast. He is the founder of ModernIR and Market Structure Edge. He will run the show and give us his market structure thoughts on everything and anything. And then at 9, we've got Matt Hammond, who will preview the week in IPOs for us. He is from IPO Warriors. Before I throw it to Joel, everyone, do us a quick favor. Hit that like button. Hit subscribe. We crossed 100,000 subs on Friday, and now we have to get to 1 million subs, and we are on our way. So give us a subscribe, give us a like. And now, Joel, how was your weekend? That was a very exciting Belmont Stakes I watched.
Good morning, Spencer. And of course, I don't talk about the Belmont.
I know.
We didn't talk about it on the show. We didn't talk about it on the At the Close show.
Nope.
And I finally picked a winner. Finally picked Essential Quality. You know how I hate to go with the favorite. I went with the favorite along with a couple other horses in Perfecta, and it paid $15. So whoopee, but I had it a few times, and better than getting less than 2-1 in the payout on Essential Quality. But hey, at Blind Squirrel, I broke my streak, my losing streak in the Triple Crown races. Made a few dollars, no big deal. Besides that, I want to say happy birthday to my mother-in-law, 84 years old today.
Wow.
And Lisa cooked up some ribs and salmon. Oh, my God, cooked up a storm. I did some cleaning up. So happy birthday, Grandma, if you're listening. My favorite mother-in-law of all time. To the S&P futures markets, we're flat here. This is called 28 1/4. Nicked Friday's high, strong close, 32.50, 32 even, double top if you want, 38 1/4, the old-time high. Crude just hanging out. We did hit 70, but we're down a dime in 69.52. Gold still struggling with 1900, down 430 at 1887.80. Silver, that's down 20 cents at 27.70. Bitcoin, wake me up when it breaks out of the 35 to 40K range. These basis to futures going back over 2 weeks now. Big move coming in Bitcoin. Ethereum up $131 at 28.33. Let's bring in Triple D. And as usual, on a Monday, he has fired up from his Twitter feed over the weekend. Triple D, how was your weekend?
I read too much Twitter on the weekend, I think, and that's what fires me up. And I come in with these fiery Monday morning segments because I see so much uninformed opinions out there that people are passing around as fact. And, you know, we're going to get into the naked short selling talk in just a minute here because it really is not common practice. We're going to replay a clip from 3 months ago when we had Bill Hartz on this show, who very clearly explained why GME's short interest got up over 100% and how that's possible without naked short selling. We're going to talk about buy-ins, what your broker does when they don't have the stock to borrow anymore. So we'll get into that in a second. But back to your original question, weekend was good, beautiful weekend. Sunny, kids were playing on the beach. It was a beautiful weekend. 90 degrees up in Georgian Bay for this time of year. That is hot.
What about the water? How warm is the water?
Oh, the water's cold. We went in, the kids were in. I bet the water's, I don't have the temperature of it, but I would think probably Georgian Bay 65 maybe, maybe 70 in some spots when you first put your feet in where it's only like a foot deep, but as you go deeper, it gets colder. So it's still cool. The water's cool. I mean, there was ice in the water 7 weeks ago, so it's cool. It's definitely not 70 degrees. It might be 65. It's cool.
That's cold.
And in other news is my cottage is actually getting bulldozed this morning, right now as we speak. My wife is supposed to be taking a video of it because I didn't want to miss you guys. So I am here for you even when my cottage is getting bulldozed as we speak. The excavator's right there with his big claw ready to just attack it. So we'll see. That's going down today.
All right. So do you want to attack this educational piece here to get started? Should we cover the
let's go because some people wanted to just we'll get it out of the way. So all through the weekend, I'm seeing naked short selling. People are just running rampant. Wall Street, just doing whatever the hell they want. There's no repercussions. All these naked shorts are going to get squeezed. What I want to tell you, the shorts might get squeezed, but there really isn't a lot of naked short selling in practice. And when I tweet that out, the first response to me is, if there's no naked short selling, how does GME get up to 130% short interest? So what we quickly want to do is replay a clip because we don't need to re-explain this. We explained this all in the show 3.5 months ago. I'm going to take it a little bit farther, but Bill Hartz from Modern Markets Initiative fantastically explained on our show 3 months ago how short interest can get above 130 or 100% on a stock, and there isn't naked short selling. So let's listen to Bill.
Tell me if you can hear it.
Telling me that there could be another answer.
Yeah, there's a lot of confusion about this, and hopefully I can clear it up somewhat. The reason you often see in certain stocks short interest of greater than 100% has to do with something called rehypothecation of stock. Let me explain it with maybe a quick example. To sell stock, first you go out and borrow it from someone, then you go out into the market and you sell it. Let's say you just sold short 100 shares by following that process. When you do that, your broker reports that its customer is short 100 shares. So far, so good. But this is what's important to understand. The person who bought those 100 shares from you doesn't know that you sold short. That information, it doesn't appear on any of the execution or clearing messages that the broker receives. So the buyer naturally assumes he owns it free and clear. Once it's in his account, it then becomes available to lend out to a short seller again. So what happens if your buyer then lends that stock out and it's sold short again? Well, that broker also reports that its customer is short 100 shares. And so the stats now are going to show short interest of 200 shares when it's really the same 100 shares that were sold twice.
Okay, but that chain can't go on forever, right? It can only go on that extra loop.
No, actually, it could go on again and again and again. And
really? Wait.
That's basically it. Unless you want me to keep
I
going.
want you to keep going on the 2
Keep
minutes
going? All right,
because this is an educational.
I'll
Yeah,
keep
keep
going.
going, Bill.
I'll keep going.
I'd say go to the 4 minute mark. So give him another 2 minutes. We love Bill Hartz. We're gonna have him back on
For
the
real?
show soon.
Let me just point out, so there have been times when there have been some ETFs, for example, that have reported short interest of more than 1,000%.
Wait. Hold on. You just like blew my mind. That change.
This is awesome.
Wait. I always thought that you can lend shares at one time.
No, because think about it. In each time, the buyer has no idea that the stock was short in the first place. Has every right to relend it if he wants.
And looking at this and it's saying, oh, it's the Wild West and it's all the evil hedge funds that are doing naked shorting here. This is your answer right here. It makes complete sense. I mean, you can't disclose that, oh, I shorted it to you because talk about that part of it.
You might ask the question, well, why don't we require brokers to tell the buyers that, yeah, this was short and you cannot relend it again. Let's say you're the short seller. Do you want the buyer to know that you're short? I mean, maybe you don't care for 100 shares or 200 shares. What if you're shorting, 100,000 shares or 50,000 shares or whatever? You probably don't want the buyer to know that you're short. And by the way, if the buyer does know that you're short, he'll have some information that the rest of the market doesn't have. And that's somewhat unfair as well. So there are a lot of reasons why this is such a tough, intractable problem. But I guess people should know that there are a lot of smart people that are working on, different solutions for this. Sometimes it's interesting to drop onto Twitter once in a while. There's a group of market structure nerds that often discuss these types of things and they bounce ideas off each other and so on. It shouldn't blow anyone's mind per se, although it can be a problem in a short squeeze as we saw with GME.
This just, dispels that, myth there that everybody's doing naked short selling. I mean, Bill, a lot of people in the industry too. I mean, this is low hanging fruit for a regulator. If you're not getting locates on your stocks, this is something they're looking for and something they can easily track and easily fine. And obviously, if you're, doing it to a detriment to the market, you could go to jail for this. I mean, this is like not something that is common to just have naked shorts on. They cracked down on this stuff after the financial crisis. And I tell you, they audit traders, they'll come in there and make sure they have their locates. I keep all my locates. I keep a record of these things on my PC for a prolonged period of time, just in case I get an audit.
For most retail investors, the broker basically does all that legwork for them. But you're right, it's important. It's easy for the regulators to spot. And so it generally doesn't happen.
That's it. Okay, that's good. So taking it back. And I know this from experience. I mean, we have audits that happen to our firm at Bright Trading as well, and they check this stuff. So before the financial crisis, 2007, 2008, there wasn't the crackdown on this. Dodd-Frank and all that changed it, and they really started crack down because short selling really got a bad rap when we saw stocks falling and Bear Stearns falling, and they didn't want naked short selling happening and people potentially knocking stocks down before 2007. They really cracked down on this, and it's to a point where if you're short a stock, and people don't know this too, I'm going to talk about buy-ins here. If you're short a stock, let's say you're just happily short a stock, you've borrowed, you've got the borrow, it's good. All of a sudden, the original person who borrowed from sold that stock and the inventory is no longer with the prime broker. They will send you a warning and saying, look, we cannot locate more stock for you and you have to cover this by 4 o'clock or we will buy you in on the close. Then they send you a buy-in notice, it's called. At Interactive Brokers, they usually give you about 1 hour where they'll say, we can't locate it. If we can't find it by 3:50, we're giving you notice that we are going to enter your account and physically buy the stock back in the open market. So that's how much the prime brokers are protective of this, because not only the trader gets fined, the broker gets fined as well. I've had buy-ins happen to me lots of times. I short stocks and it's like, I get that notice. I'm like, I want to be short this stock. And I know I have to go cover it right now because if I don't do it,
or they will.
The broker will physically go into my account and execute a buy and buy the stock back at usually a horrible price.
They won't work it. They don't work.
No, they just open market order. You are out. That happens in practice. That's happened to me dozens of times over the course of the last 12 years. So I know this happens. Buy-ins occur. Can you imagine, you're short a stock and, you're new and the broker enters your account and buys it back? That's how strict it is. And we're passing around all this nonsense on social media here about naked short selling running rampant. It's not happening, folks. This is misinformation. This does not happen in practice. Could there be a naked short sell out there? Could there be one? Yeah, but the major prop firms, the major volume makers, Citadel, they're not running around doing a lot of naked short selling. They're going to say, oh yeah, we have some fines from the past. The fines could there be isolated incidences? Yeah, probably, but it isn't common practice that everybody's just running around and doing naked short selling. It's the Wild West because there's fines for that and potential jail sentences for that. You can't be doing naked short selling. Not since 2008, not since the financial crisis.
And probably the bigger you are, right? And the bigger your positions, the probably more scrutiny that you're under. Right. I mean, the big positions are noticed and reporting. Let's just go into another real life example here, and I'm bummed because I can't bring up the charts because because of the merger. But there was a situation where the Viacom and the Viacom B, I believe at the time, got so out of whack because what was it? What was his name? Summer Redstone and the family.
Redstone had like 90% of the VIA at one time. And I honestly think, like, we all got buy-in notices. So there's a lot of traders. VIA, if you go, it's called VIACA and VIAC now. And these two stocks are the same company. One has voting rights and one does not. So they typically, the one with the voting rights trades a little bit above the other one, but they track each other very closely because it's the same company. It's share class arbitrage. But about 5-6 years ago, and some of you traders, you know, the professional ones out there that are listening probably remember this. VIA all of a sudden became hard to borrow. We couldn't get locates on the street. I got a notice as well because I would trade the spread. I'd short if VIA went up too high, I would short it against the VIAB and it would come back in, you know, and that's how the market stays efficient. They track each other because as it gets away, shorts will come in to bring it back in. They keep the market efficient. Well, what happens is when you all of a sudden get one that is, you know, not able to borrow, it starts to throw all that efficiency out the door. So everybody gets a buy-in notice that, okay, we can't get locates. And it went on for like a week and a half. There was no locates. And what happened is VIAB and VIA, which typically was trading on 3-point spread, blew out to 20 points.
I remember.
And people are, what's going on? I can tell you what's going on. We got buy-in notices. There's no available stock to short VIA. So nobody can keep the price in line. Buy-ins are driving the price higher. Because, you know, maybe there was a little bit on the street, maybe people are scrambling, they're trying to find a little bit, but as it becomes harder and harder to borrow, that it's driving the price higher and higher. What happens afterwards? You know, eventually it just comes back down, and everybody who bought VIA at a very, you know, VIA versus VIAB at this higher price got burned because eventually it came back in. But that was because there was no stock to borrow. I honestly think maybe Redstone said, look, I don't want people showing my stock. I'm not lending it out anymore. And he was like 90% of the shares. So, you know, you're scrambling around with the other 10 trying to find it. We also saw it with DISCB. This is one that is not widely
This is
traded.
more recent. This is more recent.
This was back in March. There's not much arbitrage that goes here because there's literally like one, very little stock to borrow. But two, it's, you know, just not really tracked. If you look, DISCA and DISCK trade very close to each other. They're very widely traded. There's a lot of volume on them. The locates are readily available. DISCB is loosely connected, but because it's the same company, but because, you know, there's just not the stock out there, like it doesn't even trade very much. There's no professional traders that are keeping that price in line. So that's why it can just kind of have these explosions where all of a sudden somebody gets on and it can really explode, but then it comes back down. So what happens is the people who are buying it back at the end of March are getting burned because there's no, it's inefficient. It's an inefficient market because people can't borrow stock to keep the price in line. So that's, you know, the big thing what shorts do is they keep the market efficient. They keep pricing efficient. Could you imagine if your SPY 500 components just traded, SPY didn't equal the S&P futures and the components didn't equal the S&P? Can you imagine that ARKK didn't trade? We didn't have the mechanics, you know, of the arbitrage in there, and ARKK didn't trade, you know, anywhere near its NAV. It just traded for whatever price.
Net asset value is
it's shorts that keep those prices in line because as it gets higher, they can short the stocks and then deliver those stocks and buy back the index. So it's shorts that keep the prices in line. So we know we want this narrative. A lot of people want this narrative that shorting is evil. It's un-American. Why would anybody do it? Short selling, the honest truth, is keeps the market more efficient. You know, it reduces those huge bubbles that we get. It's, you know, in the event of a market crash, and I was tweeting with Herb Greenberg last night, he's like, you get these free falling stocks. Do you want to know who is the first person to buy during a market crash, because when the market's crashing, nobody wants to buy. You know who stops the market crash? The short seller, because he's exiting the trade. So he's putting bids in there saying, I'll come in. And then more liquidity. And then it's like, oh, there's some buyers here. So the short sellers, in the event of a free fall, actually are often the first people to buy, so that you actually see, some people come and, other people come in. Then there's buyers. Okay, I'm confident because there's a bid here all of a sudden I can lean on. And then you have other people come in. Short selling serves a lot of purposes that a lot of people don't want to believe, but it keeps the markets more efficient.
All right. When will CNBC have Bill Hanson? Can we get an over under?
There's some questions in the chat.
Sure, let's get them.
And then what about like fails to deliver? Can you explain how that fits into the?
When you have a fail to deliver, so I mean, what happens even in buy-ins is it'll be a fail. That's what really is starting the buy-in. All of a sudden, the stock is not available to locate. The prime broker will get a notice. We don't have the stock here, so all of a sudden, we've got to buy the stock back in, so we'll enter the account. The brokerages don't want to get fined. This is what people don't understand. The broker gets fined for this too. They could, especially on a retail level. I mean, they're not going to go find the retail trader, because this is all handled behind the scenes. At a prop firm, you can get your own locates. You're doing some things. I mean, it's a different story that they can find the individual traders are licensed. They've written some SEC exams or regulatory exams, some FINRA exams. They know what is going on, so they can find those individual traders. You typically don't see a retail trader get fined. So if you're like at a company like Interactive Brokers, they don't want to, Petterfee doesn't want to get a bunch of fines from, fails to deliver. So he gets a notice of fail to deliver. He's going to the account and buying it in. So they're not carrying it. So, I mean, and in some cases, it might just be that they had a locate and they all of a sudden don't have the locate now. Or maybe they were, when you get a locate to short a stock, it's not just for the day you're executing it, Spencer. You have to continue to have that locate. If you're short the stock, it has to be continued to be able to be continued borrowed. Not just for the time of execution, but for the whole time you're holding it. So you could be holding this for a month. All of a sudden, we can't borrow it anymore. Well, you've got to cover it in because we don't have the shares anymore. There's a fail to deliver there. We don't have it now. So now we've got to go, and to avoid regulatory fines, we've got to go in the account and buy those stocks in. So fails to deliver lead to buy-ins, which I was just talking about.
So, I mean, I guess people are looking at the data from the SEC and saying there's a lot of fails to deliver all the time,
and those lead to buy-ins. So, are we seeing the buy-in? Are we seeing that data in the SEC data? Those lead to buy-ins. That's the next step. When you get a fail to deliver, the broker goes in and buys in the stock. So what people don't understand, fails to deliver can occur not just from nefarious activities. It just occurs because the original buyer sold a stock. The original person who was in your brokerage house that you borrowed the stock from, they don't know that you've borrowed the stock from them. There's no communication between you and the original buyer you borrowed the stock from. All of a sudden that broker doesn't have the inventory. He sells the stock or she sells the stock. All of a sudden, you're short the stock. There's no stock to borrow here now because that original lender sent it. We don't know who that is on the other side. Maybe there's a lender that doesn't lend stock. You don't have to lend your stock out. So all of a sudden now we have a fail to deliver because we have you're short the stock, which has just been sold. So there's not there. So we have a fail to deliver. So we've got to come in your account and buy your stock in. Prime brokerages are not in this business to get fines. They cover themselves. That's why you get buy-in notices. That's why and if you're doing it at Interactive Brokers, you can be on a retail level. You're shorting stock, and you're not going to get this on Apple. You're not going to get this on Microsoft. You get on some small little DISCB. It happened on Viacom, which was a little bit rare to happen on a stock that's widely traded as VIACA. But you get into some thinner stocks, they might just be borrowing from one or two other people, and they'll lend it. And all of a sudden that seller sells. Now you got to fail to deliver. Now you got to go do a buy-in. So fails to deliver lead to buy-ins.
These mechanics have been around for a long
absolutely.
time.
20
these
years
mechanics
ago
have been around for a long time. I mean, it's like these guys think they're discovering kryptonite or something. I mean, this is market structure. This is what Dennis has been studying for the past 20 years.
It's not even studying. It's what I do in practice. I mean, I'm doing this stuff. I get buy-in notices. They're not fun. I hate getting a buy-in notice. I might be bearish a stock and thinking it should come in, and it might come in. I might be right, and I have no choice. I get that buy-in notice. I have no choice. If they can't locate the stock, like I said, they usually give you an hour warning at Interactive Brokers. I know you get it about an hour before, and people have Interactive Brokers who short stock might know what I'm talking about. And then 10 minutes before, like, we cannot locate it, we're coming in your account, we're buying it in. So if you don't do it, we're going to do it. So, like, and it's a horrible feeling, because if it's a stock that might be, a little more widely shorted, it can actually drive the price higher. You get those buy-in notices and you're like, oh, this is going to go up on the close. A lot of people have probably got to cover this right now, if you think. But, in most cases, they're not that wide. But sometimes it happens where you actually see, and in the VIA-CA case, or VIA, it was VIA back then. I mean, that ran for days as the buy-ins were just coming in. I saw some preferred stock do the same thing too. I can remember it was like these preferred stocks, these stocks trade like 25. This thing exploded like $35 on a close one day, and people are like, what happened? There's a buy-in notice. We knew that on the street. There was a buy-in notice an hour ago. So everybody was really thin. There was a lot of stock available, and they had to just take it way high to get everybody done.
Quick
so
question.
Buy-ins do happen in practice.
Quick question, and I can give my answer. You can give yours, Dennis. So why are brokers limiting shorts then? I would say number one, they probably don't have the stock, because they can make some money on lending, and lending. They can make some big money lending.
It's big money made
shorts.
lending stock. It's a business. It's
a big money business.
Business.
So if and big rates, I mean, what did the rate get up to Twitter? Like going into like the lockup, the first lockup expiration. So if they have the stock, they don't pass that on to the customer. It's like no, discount or anything. So that's my answer. Triple D, you want to add to that?
I just want to say, like somebody's saying, if you're so confident,
I was about to say,
why not go and short AMC stock, Big Mouth? That's what somebody just said to me in the chat. Well, it's nothing to do with where I think the stock's going to go. I'm telling you the reason, that AMC is driving up. It's not naked short selling. It's getting squeezed. It's hype. It's FOMO. It's people, just driving price. It's not naked short sellers getting squeezed. That's not the reason AMC is going up here. There's not a bunch of buy-in notices on AMC. AMC is not even that difficult to borrow, I don't believe. Like I've shorted, it's not like even a hard stock. It might not be easy to borrow, but you can get a locate on it. So it's nothing to do with where price is going to go. What I'm trying to tell you is this narrative that, we're breaking the naked shorts. There's probably not a lot of naked shorts in AMC. And maybe it's going to continue to go higher. I have no idea where AMC price is going to go. I've said on this show, if you've been listening for the last 2 weeks, when price is disconnected from fundamentals, it can go anywhere. Price can go absolutely anywhere. Why would I short a rocket ship? Why would I short a stock that was going straight up? Now, AMC gets more interesting because it does look like it's topped out to a certain extent, but we don't know. We saw GME. It looks like it's pulling in and then explodes again. So to answer your question, I have absolutely no idea where price is going on AMC. It's a hard stock to predict because it's not connected to fundamentals.
I want to apologize because on the show Friday, I was looking at the 15-minute chart, and I said, I think it's coming in. I think the range might be 45 to 50-ish. And I was wrong. I was wrong on the upside. It was 46 to 57.50. So I really
call the under 10-point range. You almost got it.
Yeah, I want to apologize to anybody out there. And what I'm seeing right now is, and this is even tighter, 46 to 52. I mean, this thing is going to wind. We had an inside day and then another inside day. Could we have a third inside day in a row? I don't know, but it's coming in, and the ARBs are getting a hold. They're trading the order flow, and it's just getting tight. And also another thing, folks, you gotta take into considerations. People are coming in, and they're like, "I'm buying the 70 calls for $4." Market maker says sold to you. They come in and they hedge it with the stock, and they could care less whether it goes to 75 or 45. They're locked in. They're hedged.
They do hedge.
They're hedged. There's so much hedging going on right now in the option market that they don't care if they need 100,000 to buy and to offset an option order. They're just coming in, bam, 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 and then with absolutely no care for where the stock is going in. They're just locking in their teenies. They're locking in their points. So a lot of other dynamics going into this stock, just then, the apes versus the evil shorts. So much more going on in there.
I mean, everybody says there's a lot of AMC promoters in the chat right now, and a lot of people are giving us hate. I'm not even talking about AMC stock.
Why
I'm talking about naked short selling.
He's not even saying this.
I'm not even saying I think AMC. I said on this show it could go to 1,000. It can go anywhere. I'm not trading AMC. It's on its own. It's doing its own thing. We've had analysts drop coverage of it because it's not trading with fundamentals. Stocks don't trade with fundamentals, and this happens. This isn't the first time it's happened, folks. Tilray wasn't trading fundamentally either when it went from 15 to 300. So usually fundamentals win in the end, but I don't know. Maybe we're in a new dynamic. Maybe you guys are going to win. Maybe it's going to go to $500, $1,000. It could. I'm not saying it can't. I'm not even talking about AMC performance. I'm not talking down, your stock here. What I'm talking about is the narrative that naked short selling is running rampant in AMC and we're going to squeeze them all is wrong. It's just not, it's not in practice here. I mean, as prop firms, we kind of know what's going on. I mean, we're not like, we're being accused that we're all in here. Hedge funds are all in here naked short selling AMC. And I'm telling you they're not, they're getting fined for it. But, you can have your other, obviously the stock's trading for a lot of other reasons. I'm telling you, it's not naked short selling. That's a good thing for you guys. It's not buy-ins driving this. I highly doubt it's buy-ins driving this. This is getting driven by real buyers. So when those real buyers end is the question. But it's actually a good thing because you know what? If you're driving just a buy-in bus, when the buy-ins end, the stock price collapses. But I'm telling you, this is not a buy-in bus here, where this is probably actually real buyers in here. Now, I don't know when the real buyers end. I don't know when the real sellers outnumber the real buyers. I'm not going to speculate on that. I'm just saying the narrative that naked short selling is driving AMC's price higher, that they're covering and squeezing them in is not right. That's all.
All right. I two quick things, and then I'm going to move on to one. Someone in the chat said fails to deliver data is not available. Yes, it is. It's all on the SEC's website. I put the link in chat, or just Google.
Oh, good.
Just Google fails to deliver. The data it lags. Obviously, it's not real time, right? But you can see that data. And the second thing is TD Ameritrade restricting clients. Basically, you can't buy AMC on margin, and that's to protect their own ass as much as it's to protect other people. So they're just trying to protect themselves.
You know what the worst thing about all this is?
What?
That we're not really not be able to give our listening audience good content.
Okay, so let's move on. Fine. Although interestingly enough,
it is good content, Dennis. I don't want to.
No,
I know it's an important thing. We just spent, and I'm not going to swear.
I think we needed to. We needed to do this, though. Every once in a while, we need to give out some educational content. We love to talk stocks. We love to give opinions on stocks. We love to talk what's moving, the action, where the action's going to be this week. There's so much action in AMC. We're talking it every day because there's just a lot of action in these stocks. So we talk where the action is.
I agree. No, it's good. It's a different slant on things, Dennis. I know you love doing it. I'm doing it. I'm just kind of AMC. I kind of want to go to the movies now and get some free popcorn.
I do too. Okay, well let's go to the movies. Let's go to the Biogen movie here.
Yeah,
this is going to be a good movie
Stock
here
number
tonight.
2.
Biogen, and predictably, again, we talk about the run-ups into the event. Look at what has happened here. Biogen, we know, is going to get the decision on their Alzheimer's drug here. Is it due? It's due today, is it not?
It's due today. I thought it would have been out by now.
Not out yet. Could come anytime. Probably, I would think they bring it after the close now, but maybe not. So anyways, you can see the big move on Friday, 273 up to 291, now up to 296. Lots of speculation ahead of this event. Again, we try to give you actionable trading ideas. I talk about run-ups into events. Usually you get, before the event, you get a run-up into the event. Classic example. We talked about this last week with Biogen, saying it potentially could run up into this event. We have exactly seen that. 2 days of run-up into this event to the tune of going up over 10% into the event here. So does the drug get approved? I own Biogen shares. I've had it for a long time, a long-term portfolio. I hope it does. I doubt it does. Like I said, I think the downside is probably 50 to 70 points. If it doesn't get approved, I think the upside would be hundreds of points. I do not think it's going to get approved. I don't even think the downside.
Yeah, but they could. There's so many in between. Just first of all,
you're right, Joel. There's a good point.
Yeah, in between. I wrote about this on PreMarketPrep.com over a week ago, and I saw all the selling pressure in the week before. So all the nervous people, they sold it. This was the week before. Put a little triple bottom in, right? And undercut and rally, and people are like, man, I don't want to be short going into this thing. And you talk about issues with an upcoming catalyst. So once it started going, you started finding buyers, down here, and then they don't care about the outcome. They see the formation, they see the breakout of the quad top, they trade it, and they're probably out of it. They identified the catalyst, they looked at the technical formation, and they're flat dumb and happy now. If it goes to, maybe they're holding a few shares. If it goes to 350, and maybe, it depends what your options positions are, but that's what, Dennis talks about is issues with a catalyst. And this was actually, I noticed this a little, not this weekend, but the weekend before. So you had to sell, you had the nervous sellers, you had the, fortuitous buyers, and now you have the result. They also could come out, well, and I think this is what happened last time. Well, we're not approving it, but if you do one more trial and you do A, B, and C, right? And then the other thing I just want to, they've been talking about this drug for a long time. And we were on the show, we were covering it. This was when the initial news came out, and this was back in 2015. It went to $480 on that day when the initial, hey, we're working on this drug. So it's been around a long time. They spent a lot of money on it. I don't know what else they have in the pipeline,
Lots.
Yeah, who knows?
Huge
I mean,
company.
yeah, it's a big company, so
It's
we'll
not
see
going
what
to break
happens.
them if they doesn't get approved.
No.
And the panel's recommendation, Spencer, if I believe back to the end of last year, was to not approve. Correct? They had a panel, and the stocks fell significantly. You can see the big spike in the chart. It would have been back on November the 6th when the stock went up to 243 to 363 because there was speculation the panel was going to approve it. And then they said their recommendation was to not approve. And then you see the subsequent collapse the next day.
But there was something. It was weird though, because something came out on this day. Didn't someone come out on this day and say, "Looking good"? It
was what Dennis is referring to is November, I believe, right?
I got it right here.
The big spike to 360.
Right.
That was that people were saying, "Oh my goodness, it might get approved."
Yes.
And then the next day, it was like, "Oh no, it's probably not going to get approved."
Well, yeah, that was on November 6th. They voted 8-1 against approving it. So. But we're gonna get a decision today. So I would have thought it would have been out by now. I'm surprised. I guess if it's not out by 9:30, then it'll be out after the close. I guess that's all I can really.
Are they gonna halt it or not?
Or they can just halt it.
They could.
They could do that.
So if you're trading Biogen, just be aware, major, and I mean of this serious nature, material news will be supposed to be coming today.
Yes.
So it could happen anytime you're day trading Biogen. Be very careful. You could get caught on the wrong side of the news. You might get caught on the right side of the news too. When a stock halts, like I've been in random halts before, I was like, well, it's 50-50. Is it going to be good or bad? Sometimes it's good, and it's like, oh yeah, that worked out well. And sometimes it's bad, and it's like, So.
All right.
Anyways.
It's 8:36 on Monday. Which means
Tim didn't quit. He didn't quit us after this conversation.
Not yet. Tim Quast joins the show now. He is the founder of ModernIR and Market Structure Edge. Joins us every Monday, except when there's holidays. Tim, how are we doing? Long time no talk.
Yeah, good to see you guys. I'm going through withdrawals, but not from Market Structure.
Okay.
My trainer, the great Charlie C., decided to go on hiatus for June and July. And I should tell you, so Charlie he's got a degree in applied mathematics, and he was the founder of a quantitative hedge fund that he and his partners sold. And the algorithms behind it have become the algorithms that robo-advisors use. And so, what other trainer would I choose but a quant math guy? Right? So he just trains for fun, and that's what you want to do with Edge. Use Edge so you can do whatever you want for fun. That's the idea. But I heard your discussion about Biogen, at least a part of it.
Yep.
And Dennis, I thought
what's the market structure look like going into this event, and how do you approach? I mean, when you're going to get a major event like this, it's going to move price way up or way down.
Right.
Does the market structure on this matter, or is it can it predict it to a certain extent? I'm question to you.
Yes. Well, it will show the very advice that you gave, Dennis and Joel. It's funny that you mentioned 5 because Biogen is very routinely a 5, and those are great stocks to hold. If things do well, they deliver consistent market-like returns if they're 5. Around 5, if they bounce up to 10, they're good trading stocks. If they just stay at 5, they're not great trading stocks, but they're great stocks to hold. And here, I'll show you. And if you're following along at home, in the easy chair, go to marketstructureedge.com and you can sign up for free and do the same thing. Put in BIIB in a portfolio, and I'll show you exactly what we're talking about here. Here we are. Let me remove my own face from the screen. So here it is, June 7th, day after the anniversary of D-Day, by the way, June 6th, 1944 was D-Day. So here's Biogen. And see, Joel, how it's at 5.5, no matter what the price does. Now, how can that be? Because the big institutional dollars tend to reweight out of and back into Biogen. And so because market structure sentiment, this algorithm we use to help us determine when to come and go, is based not just on price and supply and demand, but the behaviors behind it. So if those behaviors keep reverting to the mean, so does market structure sentiment. And it will tell you that as long as it's a 5, you stay in it. Here, before the news, look at that. It's the first point over this period of time, 30 trading days. And we can go back, Spencer, to look at what happened in November when the board, I forget what, the FDA voted against it. But here's where we are right ahead of the news. It is actually a 1.8, meaning it is bottomed, and you want to buy sentiment that ticks up. Then notice short volume. Short volume jumped up from about trend of about 38% of trading volume all the way pretty close to 50%, 48%. That is an exact straddle, Dennis. It will tell us that traders and big institutions both have hedged themselves long and short, puts and calls, swaps for, swaps against. And big money is going to use swaps to say, if anything goes wrong, I'm handing the risk of this to Goldman Sachs or whomever. But that's what it tells you. I would say based on that the bias is positive. Here's why. Sentiment is all the way bottomed and short volume is not all the way to 50%. If there's a slight advantage, it's to buyers based on that data. But let's expand it out. So if we go back, with 6 months, it's not going to take us all the way back. Let's take a year. So let's go back to November. There's that really bizarre move, right? And so interestingly, into that, sentiment was rising, short volume was very low. Everybody got caught by that. That's what it tells us. That I think the traders thought that this would get approved then, and it didn't happen. What could you have done as a trader? Stayed right where you were. That's the honest truth. You'd have still lost this much, but it bounced right back, and sentiment would tell you that. Then here's the awesome entry point. When the sentiment recovered here, you could stay all the way till it dips below 5, leave, wait for your next entry point here. You could leave here, come back here, and you say, well, why would I do that? Because you capture all the gains and avoid the losses. And
that's the point.
Yep, that's exactly the point. That is exactly the point.
So let's go on to the other stocks. So obviously we got Biogen. It's going to be a major mover today. I want to see the market structure sentiment on AMC now here, because this stock is all over the place and everybody is talking about it. I have no idea how to predict the next price move in AMC. We do know there's flying around on the weekend that it is likely to go into the Russell, because obviously it's. What's that, Spencer?
Russell 1000. It's going to go into the large cap.
Yeah, from the small cap, because it's based on market cap.
It is
most likely.
And realize that the benchmark for the Russell indices, the initial benchmark was May 7th this year. Now we're unfolding all the subsequent steps, and Russell shakes that up every year a little bit to keep people guessing. So where it lands will not be reflective of where it is now. It will be reflective of where it was then. However, it's important. This is a very important thing for traders to know. 95% of market cap is in the Russell 1000. About 5% is in the Russell 2000. That's why if there's any kind of movement of money into the Russell 2000, boom, it moves up very rapidly because it's a very small part of market cap. But the bulk of money is here. And I will tell our corporate customers that whatever you're trying to do, if you're going to be a public company, you need to be in the Russell 1000 because that's where the money is. It's what Willie Sutton used to say when he was asked, well, why do you rob banks, Willie Sutton? And he said, because that's where the money is, right? So if you're going to be a public company, you need to have market cap north of $5 billion to be in the Russell 1000. So they're going to be there. There's no question about that. Now, to your question about market structure, here's the beautiful thing about market structure. It is not swayed by incredible moves. It's still going to tell you when things are overbought or oversold. And it does it very consistently. And I will look at the sentiment trend, and it's been bouncing against the ceiling for a long time, and look at short volume. Those two things will tell us a great deal. Here's an interesting little tidbit about AMC. So we developed that ModernIR in 2005 developed a set of data points that we have been tracking ever since then. Here it is, 2021. One of those is how many times a stock trades per day. And we have limits. The fields with which we populate data are finite. We don't want just infinite fields in the databases and the data warehouses. Well, AMC last week broke that data. I mean, it's an easy thing for us to fix, but it traded more times than any stock in the U.S. market in history. Wow. It was trading over 4 million times per day, not 4 million shares. It was trading 4 million times per day. For perspective, Apple trades around 300,000 times a day. Amazon trades about 160,000 times a day. Walmart, 80,000 times a day. GameStop, around 600,000 times a day. And here AMC was trading 4 million times a day.
Could you explain that again, Tim? Could you explain that again, please?
All that is number of instances where shares change hands. Is that it?
It's each transaction.
Yeah.
So each time there is a buy and sell that meets. So how is it possible for something to trade in the limited time that the market is open, between 9:30 a.m. and 4 p.m. Eastern time? How's it possible for something to trade 4 million times?
That's insane,
right? It's a crazy number, and it tells you what's happening behind the scenes. And we've talked about this before on Market Structure Monday, that the reason that can happen is that market makers like Citadel or JP Morgan are exempt from the short locate rules. That's Reg SHO 203B2. They are exempt from having to locate shares. So they manufacture stock to fill the immense pipeline of limit buy orders, and then they trade those things thousands of times per second. And they're trying to make a half penny each time. Well, who wants that, right? So, the firms that want that are Citadel and Virtu and Two Sigma and Quant Lab and Hudson River Trading and the stock exchange. The stock exchanges want to promote that as well because they sell data. And what is data? It is the consequence of a bunch of trades, and everybody's got to consume that data. If you're a broker dealer, you have to establish to your customers, big institutions, that you're providing best execution. Are you handling the trades well? Well, where do you think that data comes from? The exchanges sell it at very high prices. So those two things, exchanges and market makers and the short exempt rule is how you end up with situations like AMC trading here. And look, it's not done. I would look at this, this with shorts. This is the $12 billion loss that we've been reading about of people who've been short. And it's very difficult. If the market makers are exempt from locating shorts, you're going to lose. This is a very dangerous market in which to short things that people know about. Short things people don't know about, and you might be okay. But this tells us this run is not over. When this pattern reverses and sentiment declines, telling us that supply and demand are equalizing, and short volume rises above trend, telling us that supply is increasing faster than demand, price will go down.
All right. Let me ask this question, and I'm going to try and not open up a can of worms.
I knew it's coming.
But at the end of the day, is there any way that anybody can know how much naked short selling is occurring?
Well, there is very little naked shorting. And the threshold reports that FINRA requires, not the SEC, FINRA. FINRA is the regulator. It used to be called the Financial Industry Regulatory Authority. And you go back, this is a combination of the NYSE's self-regulatory organization and the NASD, the National Association of Securities Dealers. And that they created the automated quotation system in 1971. That's the NASDAQ. Well, then they combined their regulatory bodies. That became FINRA. And it's a bunch of grossly overpaid folks, by the way, that you look at what they get paid, millions of dollars. But so they regulate these things, and they require a threshold report. What stuff has been short and people have not located it, and there will be a buy-in. It is dominated by ETFs, by the way.
It's exactly what we were just talking about.
78% of them
bought in.
That's not the problem. So the people who are trying to look for naked shorting in here don't understand the way that the stock market works. There's
if you rewind the tape
Tim,
40 minutes ago, we went into this for 20 minutes, and they're not going to listen, Tim.
Yep.
I mean, it's not naked short selling running rampant. That is Tim's telling you. Tell him, Tim. It's not naked short selling.
It's not naked short selling, and it is not illegal behavior that is leading to this. If you have a bone to pick with someone, it is the SEC. And I tweeted this. If you're a short seller of AMC, your argument is with the SEC, which exempted the market makers from the law. I've long said, how can a regulatory body that is an executive branch agency exempt some group from a law created by Congress? It's a question that should be asked. But they're the ones that did it. They're the ones who said, if you're Citadel or Goldman Sachs, you don't have to locate shares. Why? Because they wanted a continuous auction market. They want it to be possible for you as a trader to show up in the market and buy or sell 100 shares of everything at any time. Well, it's a physical impossibility unless a market maker can create shares. So they do. And what we have discovered here in the meme stock era is a huge Achilles heel of the market. Realize this could happen to any stock in the market. And Reddit traders, you should realize this. You could do this to any stock, right? You could do it to any stock. It doesn't have to be AMC. It could be Apple.
They're figuring that out, Tim.
Yeah.
They're figuring that out.
It's not just, I mean, we've had GameStop, AMC, everything is getting run. And you have to be careful as a short seller. You obviously have to be careful of who's talking about your shorts. I mean, people want to know, what are you shorting, Dennis? What are you shorting? I'm not going to disclose the information of what I'm shorting so that people can say, oh, Dennis Dick is short this. Let's go run this up on him. That's your own information. Why would anybody want to disclose their own position unless they're like running pump and dumps, which is running rampant, it seems like, through social media right now. But, I don't want to disclose my positions, especially if they're short, because we saw what happened to Citron. Andrew left. I mean, when he originally disclosed the GameStop, and everybody got angry and they ran it up on him.
Right.
So, I mean, it is a dangerous game, and we're not coming in here advocating for everybody to get in the short selling game. You've got to know what you're doing. But short selling does serve purposes here, Tim. I want to hear you say it too, because I was saying short selling is what keeps the market efficient. Without short selling, the market pricing mechanism all continues to break down because the majority of your liquidity is actually provided by short sellers. No
question. And the data show us this every day. And I'm just going to make a little plug for you traders. You can see up here on my screen. You go to app.marketstructureedge.com and you can register and use this, because this is the point. You want to know when these conditions exist. And to my knowledge, we have the only platform that will tell you this. Yes, short selling has long been a great regulator for untoward behavior in capital markets. And I would submit to you that the SEC, by exempting market makers from the requirement that you be able to locate short shares to borrow within a window, or you have to cover them, that by doing so, they are distorting the market's capability to tell us whether there is trouble in the market. And it should bother us as traders. It absolutely serves a purpose. I am never opposed to short selling. I thought it was a mistake when we suspended when shorting and the uptick rule during the financial crisis in 2000.
And that was a mistake, Tim. I have the stats on that. I actually did. I ran the stats for Bright Trading, and I wrote it up. And during that 3-week ban, So here's something during the 3-week ban where they banned, and people don't know this because there may be newer traders. Back in 2008, during the financial crisis, there was this worry that short selling was killing the market. They actually banned short selling on all financial stocks for 3 weeks. And then they realized the liquidity dried up. You know what happened on the first day, Tim? There was a whole bunch of buy imbalances. All these financial stocks gapped up on the close because there was nobody to short, nobody to provide liquidity to that. And then they all collapsed the next day. And the end result was the stock market during that 3 weeks fell 18%, and the financials fell 23%. The financials fell more despite not being allowed to have short selling on them. And they realized, we just messed with all free market mechanics here. And this isn't working. And they pulled it 3 weeks later. So we had a real life experiment about banning short selling altogether, and it did not work.
There you go. I think the millions of unfettered minds making decisions that involve risk is far and away the best regulatory mechanism we can have. It's far superior to a bunch of bureaucrats who receive a paycheck no matter what happens, and who have no risk at all when they make decisions like that. I am always opposed to that notion, and it's just basic common sense. You want people who have risk to make the decision about things that are occurring in the market.
All right, Quast, GWS says in the chat his breadth of knowledge is incredible. Completely agree. Joins us every Monday for Market Structure Mondays. You can learn more, find out more. His platform, the link is.
We all know I only know market structure. I'm an idiot about a bunch of other stuff. So it's only this.
You do very well for yourself, Tim, and we love you.
Back at you. Love you guys.
All right, thanks.
Just one other thing. I just wanted to add about for Tim. No, I just wanted to thank you. I just wanted to make some comments on the chat too. And just as far as like what Dennis is shorting and stuff, a lot of times he's hedged against the index. So he has trading hedge positions, and also the way he trades, the size of shares and everything, it's like you're wasting your time doing that and thinking about that strategy. But Tim, great talking to you. I didn't get to guess as many stocks this time, but we've only covered 3 stocks the whole show. Anyway.
I mean, it's been a good segment though. It's been a lot of education here. Obviously there's a lot of people who, their narrative, is being debunked here. Tim said the same thing. It's not naked short selling, but in any regards, I've got a lot of hate going on here because there's a lot of AMC lovers. I'm trying to tell you, I'm not the person giving AMC hate here. I didn't say go short the stock. I'm not short AMC stock. I'm the one that said last week it could continue to go higher, but people think I'm an AMC hater. They want to believe what they believe. And, I just think it's a fascinating stock to talk about. But, I want to, I'm trying to just give you, what our reasoning behind, that, this whole naked short selling, narrative that's being tossed out there isn't correct. So we're just trying to help traders better understand and educate traders. So anyways, everybody hates me in the chat. I mean, not everybody. 90% of people seem to give me some love, but 10% really voice their opinion about how much they dislike me. So, okay, all good.
Wait. Well, we have 3 minutes before 9 o'clock. Can I take a second, since we haven't discussed holding the stocks anyway? Why discuss more at this point? Can I take a second? A second and announce the winner of our Tesla giveaway?
Oh yeah, do that.
Yeah, I can do that. Okay, I'm gonna do that right now. I'm gonna. Can I get a drum roll, please, producer? All right. So, as you guys recall, we were doing a contest. When we cross 100,000 subscribers on YouTube, we're going to give away a free share of Tesla. We spammed the link. It was in every description of every video. It was in the chat 4 times a day. You could have entered by doing a number of things. We had a lot of entries. We had thousands and thousands of entries. The winner of the free share of Tesla is Gilbert Leal from Brownsville, Texas. Gilbert, I have your email. I'll be emailing you. I'm going to announce this. If you're not watching now, it'll be announced throughout the day as well. But Gilbert,
congratulations,
Brownsville, Texas, gets a free share of Tesla.
Nice.
What day? What close? What was the closing price?
Well, he gets the share no matter what, so it's worth $596.
Yeah, it doesn't really matter what he's getting the share.
Getting $596 right now.
Yeah. Anyway, we'll be emailing you, Gilbert. Stay tuned, and if you're not watching, then you're not going to know this.
Hopefully, he is.
We'll announce it throughout the day. All right, it is 8:58 here. Did you guys see Bezos is going to space?
Yeah, he's got some guts, eh?
Yeah.
Yeah.
Well,
Joel says he wouldn't do it. I kind of want to do it, but
yeah.
I don't want to be like the first group. It's like even when the vaccination, I wasn't one of the first people that got it, although I had no choice. But I wasn't in the trial. Joel was going to go in the trial though for the vaccine. So maybe Joel, would you go to space?
I would do what he's doing.
I'm going up north this weekend.
That counts. No, Bezos is going like 60 miles into space. He's not like orbiting Earth or anything. That's what I think like we're all going to be able to do one day is go like just beyond the precipice into space, just a smidge, and then come back down. So he's not pulling a John Glenn and going around, but
it would be just an awesome experience. But I think I get nauseous when I'm on a helicopter, so I probably couldn't handle being on a rocket ship.
Yeah, maybe. Anyway, short Amazon here. I don't know.
Trading range.
You're not allowed to short. Shorting is evil. Spencer.
Yeah, no, we are never going to mention short selling again.
I meant buy puts on Amazon.
I'm banning resistance on this.
They're going to ban. They're going to not want you to buy puts anymore either.
Dennis, we can't talk resistance. Every stock that we look at,
only buy stocks. You're not allowed to sell anymore.
And support. That's all we're giving is support because resistance is evil too. I think we can't even talk resistance anymore.
Sell calls on I don't know.
They say all we do is cry, Joel.
I know,
think
man.
I cried once on the show here today, but apparently when you just give commentary contrary to somebody's opinion, it's
I don't know why they come. I don't know what really seriously.
They're here to troll us.
Don't like the content.
They like to troll us.
Jesus, Murphy.
It's all good. We love you trolls too. You know what? We'll give you the love. You give us hate, we'll give you love. We love all you guys.
Love the haters.
We'll love the haters. Without the haters, there wouldn't be that much. It wouldn't be as fun. Yeah. So we love you guys. We love
Makes
the haters.
market. All right, guys, I'm hopping off.
We don't like
PreMarketPrep.com. They actually do between 5 and 50 stocks since we only covered 3 here today. So join me over there, folks.
SFI,
we love you. Love
AFC
kisses.
had the crazy special dividend and went X4.
How do you do hugs and kisses emoji on here?
Hugs and kisses. We love hugs and kisses.
That's what I want. That's the emoji I want.
All right. Joel's in a good mood. That makes me happy. I'll see you guys later. Yeah, guys, if you're in chat, whether you love us or not, I guess just drop us a like. If you want to dislike us, that's fine too. It doesn't really, it is what it is. But thanks for all the participation. Dennis, thank you. Joel, thank you. Yeah, just one of those days, guys. We covered like 2 stocks. I'm sorry. It happens. We'll cover more stocks throughout the day, obviously. But let's talk IPOs for a second here. We do a segment every single Monday where I bring on Matt Hammond from IPO Warriors, and Matt essentially will recap last week and what he traded as far as IPOs and what worked and what didn't, and then preview this week what to expect and how he's thinking about trading the IPOs for this week. So let's bring Matt on right now. Matt, good morning. Welcome back. How we doing?
I'm doing good. How you doing, Spencer?
Doing well. Let's talk some IPOs.
Definitely. We're going to make up for the low number of tickers we got to early this morning with a full slate of IPOs this week.
All right, let's do it.
So you got the first we're going to talk about last week, and there was just one last week. It was D-Local. We talked about them being a pretty high conviction play, and we got a left a little percentage off there, 25% potential win here. But you did have to be patient, and I like to take profits if I can take profits, at least partially on the position, because you never go broke taking profits. And you really want to stay out of that mental habit of looking at a trade where you could have made more money, where you made money, but you could have made more, and kicking yourself, for not making more. You should be happy with any profits. This is just money in your pocket. So despite being a very high conviction play, it fell out a little bit of the gate. It debuted at 31, and it dropped down to 29.80. But we had a few hints that it might come back. For one, it was having trouble, like on Webull, it wasn't even tradable. And you see this with IPOs. Sometimes the tickers, for whatever reason, won't work on a certain platform. We had this the week before with FIGs on E-Trade. The first 10 minutes after it opened, E-Trade forgot or whatever to make it tradable. And if you tried to enter a trade, it said this stock is currently suspended. With Webull on DLO, when you tried to make an order on the first day, this entire time here, you just got this ticker is invalid. So a lot of Webull traders were stuck on it. Anyway, when it first dropped, we had very strong resistance here at 30. And with the high conviction, you just hold on this. But when we did get this initial run up, that's when I took profit. I said, look, I don't want to be sitting here all day. I don't want to be nervous. I don't want to be feeling regret over here in the next morning. I just want to take my profit. So I got out here at 32.70, which was a nice win. I was playing with a pretty large volume of shares. So took about a 4%, 5% win quickly. And even the next morning, there was, I had my finger on the trigger here to maybe buy in again under 31, but I was watching a few other trades. I was day trading AI and playing Sens. But if you did hold for that day 2 run, you had so many opportunities to take wins here. And you got to love this kind of setup. It gives you almost no opportunity to take a loss unless you panic sold at the very beginning, or if you, again, panic sold in the morning of day 2. You had pretty ideal setup to take potentially a 25% win. So one thing that I do want to show you here is, because people ask me, how do I know when to sell? Well, there's a couple ways to do it. One is to say, look, I'm going to take, I'm just going to play by an exit strategy of letting it get into profit and then setting a stop loss and then raising that stop loss as the stock keeps ticking higher. When you get a run like this, it's a perfect setup for it. You let it pass 31, which is your break even. It dipped a little bit back under that, which is expected. A lot of people probably sold out when they got broke even. But it very quickly, cupped back up into a profitable trade. And you could have trailing stop lossed your way out pretty much all the way up to about 33. For me, I was watching this, and when it got back up to 31, I'm mentally going, okay, there's going to be resistance there. I'm watching level 2 data, and I'm also watching RSI. When RSI gets above 70, that's an indication that's oversold. When it dips over here and really makes a run over it, now it's at RSI 80. It was over up to about 86 while the stock reached 32. 32, there was some resistance right around here. Then it broke through. And once it starts hitting that second full number, we all know that those act as sort of mental upper resistance levels. Once it got close to that, I didn't really want to be stuck in the elevator down. So I set my stop loss really tight here, inched it up, and got stopped out at 32.70, which was a nice win. And again, you're not going to go broke taking profits. You don't need to torture yourself and say, oh, if I had held till day 2. Yeah, if you had held to day 2, maybe you make a much bigger profit. But you know what? You've got money in your pocket. There's other trades to make. Enjoy your week, relax a little, be happy you didn't lose money. Keep playing enough of these while you're making money without taking any big losses. And those wins are going to add up. I'm doing incredibly well over this year. I think the last few weeks here, every one of the high conviction plays we've called out is giving you an opportunity to take profits. So with that being said, let's jump into the slate for this week. This week we have a Chinese IPO, Zhongmen Education, on the 8th. We have Marqeta on the 9th, Zeta Global Holdings on the 10th. The 10th is actually going to be a fully loaded day, and that's something we want to think about. There are a certain subset of traders who play IPOs, and it's really hard to play them all. So you kind of want to choose maybe the best 1 or 2 of the day and try to play those. So we got Zeta Global Holdings, First Dibs, Monday.com, LifeStance Health, and then on Friday, we've got TaskUs. And of course, we are on kind of alert for a stealth IPO right now. These stealth IPOs do come out of nowhere. It's been a couple weeks. They seem to like to spread them out, and they like to hide them amongst kind of crowded weeks. So come Friday, definitely be looking out for some. There are a couple that are sort of past due, or indicating that we might be needing to pay a little extra attention to them. And I'll just mention those quickly at the end here, since we don't really know if they even exist or not. That's the nature of the stealth IPO. So Zhongmen Education. This is a Chinese IPO, but there's nothing stealth about it. This is underwritten by, I think, Morgan Stanley and Credit Suisse. So they're not trying to hide this. They are trying to promote this. This is a SoftBank-backed Chinese tutoring service, online and offline courses. So I had lived in China for about 10 years, so I understand education is incredibly competitive in China. They start kids doing insane amounts of homework and extracurricular, out of extra class time in China as soon as the kids are about 5 years old. It's gotten so bad that regulators are starting to impose curbs on the education, on extracurricular education, because students are just getting burned out and parents are competing so hard that it's kind of causing psychological problems for students. So the education industry in China is super hot, but in the last month, some of the bigger education plays, some of them that are backed by Tencent, some of them are backed by by Baidu, that scheduled IPOs are now starting to kind of step back and say, is this the right environment to do an IPO? And there's been a little bit of a backlog building up, and Zhangmen is going to be sort of the litmus test for the market. So I like that they're SoftBank backed. I like that they're profitable. Margins are kind of shrinking, partly due to COVID, partly due to regulation. But this is a really low float. We got 3.6 million shares. And to me, Chinese IPO, low float, SoftBank backed. I like this one. I want to play this one. And we could very easily see this go into a series of halts. If we don't get those halts, though, probably want to get out just with whatever means necessary, whether that's a low-balled limit order or a market order. When these don't run, it's usually kind of bad news. So watch for the open very closely. If you get those halts, cool. Start taking some position out on each halt, and leave some, let it ride. Some of these have 9x, 10x over the first day. So, and that's not just the stealth IPOs, but when you see a low float Chinese IPO, you got to get excited for the potential there. Okay, the next one is probably the hottest IPO in terms of what I think of as a good IPO play, and this is Marqeta. Marqeta does a technology solution for credit cards and debit cards for basically non-Visa and MasterCard financial institutions to offer their own kind of both virtual and real plastic cards and incentive programs. Their largest customer is Square, and Square has been a super hot stock. Their cash flow positive, 123% revenue growth. The float is pretty big, so but that hasn't been such a problem in a lot of these IPOs. And I like this especially for a day two run. This one will get that media cycle overnight. You got other buyers showing up after they heard about it, and it plays into a lot of factors that have been kind of hype words, buzzwords that have, and just industries that have done really well. These payment IPOs, online payment IPOs have done really well. Delo last week, Mentis. We had a bunch that have done really well, and I want to be in this one, Marqeta. Zeta Global Holdings. This is a global digital marketing firm that basically does digital marketing for large enterprise clients. It doesn't lose money. It doesn't make a lot of money. It has been growing revenue 25%. The float's pretty average. I'm not particularly excited about this one. I see it as kind of could go up, could go down. I don't think there's going to be as much excitement as Marqeta, so I probably want to, and it's the same day, so I want to put my attention on that one. We'll be monitoring this one, just as kind of taking mental notes and understanding what they do, but it's not something that I think is particularly exciting. FirstDibs.com. This is an online luxury goods retailer. It pretty much connects luxury design buyers with luxury designers. It's not profitable. The growth has not been spectacular. And we really haven't seen e-commerce plays do particularly well right off their IPO. Poshmark, Coupang, Honest Company, they offered little wins, but they had huge drawdowns. If you held too long, almost all of them crashed back down. The only thing making this sort of interesting is the low float with this 5.75 million shares. But I think it's a pretty crowded IPO calendar that day, so I'll probably pass on this one. Okay, Monday.com. I think most of us have heard of Monday.com. They've been spending a lot of money on advertising, both on the radio, on TV, certainly YouTube commercials. And it's work management, it's project management. They consider it more of a work OS, like a development platform, and that's kind of how they're trying to spin it as a little bit different than, say, Asana. but they're all pretty similar. They're cloud-based software as a service. They compete in a pretty crowded marketplace. And the pricing of this IPO makes me kind of hesitant to want to play it. When you've got any stock, I know that it's about valuation. I know how this works. But when you bring out a price tag of $124 to $140, there's a lot of room for that to go down. And if I'm playing with 1,000 shares or 500 shares, I'm really paying attention to how many dollars can I make on each one. Yes, percentages matter, but I want to make I want to be in a position where there's more room for it to go up than for it to go down. There's a really low float on this, just 3.7 million shares. So it is interesting that they decided to go with a low float and a high share price instead of, balancing out a little bit more. When I compare this to Asana, which is probably their most direct competitor, Asana did not have a great they did a direct listing, did not have a great performance off the debut. Certainly dipped, over the next kind of week or two after the debut, but it has recovered since then. So maybe people look at this as, okay, well, the world is, we're in recovery now, but people still need online management. Certainly workforces have spread out and diversified their locations. A lot of them have decided not to go back to physical offices. And Monday.com is in a good position to, to take advantage of this. But that price just, to me, means I can only buy a handful of shares. I think that means the same thing for other people. And if I do play this, it will not be with a full position, but maybe as maybe 100 shares. See what happens. But I'm a little bit skeptical of it. Okay, then we have LifeStance Health. This one's interesting because it's online mental health services, which is a bit like Teladoc for psychological, diseases, sicknesses, whatever, support. A lot of people during coronavirus have been experiencing depression. They've been experiencing unhappiness. Their lives have been shaken up. And that's on top of already kind of growing market for health services, for mental health services. So they've grown 95% year over year, compared to the same period last year in the last 3 months ending March 31st, 2021. The float is pretty big, but this one's an interesting play, and I think it'll get a lot of attention, and I think it will get kind of an overnight media cycle as well. Probably won't do a full play on this, especially if Marqeta really performs well, and I'm holding that overnight. But I'm going to probably be gauging a little bit of the hype and buzz on social media, in regular media, who's getting the headlines, checking out Google Graph or Google Trends the day before, and seeing is this on people's radar? Or is Monday.com? Which ones are getting the most attention? Because that retail demand is what drives those day one and day two pops. So that's what we're going to be looking for. Friday we have TaskUs. TaskUs does digital outsourcing for large corporations. Revenue's up 33%. Pretty low float. So this one is interesting to me. I am, however, always hesitant to play Friday IPOs. Day traders don't like to be in their positions over the weekends, especially. So if this does get a pop, you sometimes won't see it sustain till the end of the day. Again, I'm going to be gauging this a bit on social media. This is not one that I want to be stuck in, next week sometime if volume kind of evaporates and you're trying to jock your way out of a position without, a lot of volume to back it up. It's a position I don't really like to be in. And, things can change a lot between a Monday and Friday. When the market is hot, when it's too hot, we see these IPOs debut at prices that are, don't leave a lot of room for it to continue upwards. We especially saw that last year and towards the end of last year, where some of these Poshmark was one where it debuted at almost 100% of the IPO price. And it just didn't leave it much room to, to go up further from there. Bumble was, I think, at one of the peaks of that. And it did get a little bit of a pop, but it had a lot of room to fall afterwards. And we've seen a lot more reasonable pricing of the IPOs this year. I think the debut price is something like 20% down compared to last year. And the IPO prices are down as well. So we're seeing companies come to market with a little bit more opportunity for the retail buyer to get a position that has more of an upside potential and less the potential for it to fall 20, 30%. So I like these. I like being in these plays. Actually, almost all of the IPOs, I'd say about 80 to 90% of the IPOs over the last few weeks have given you an opportunity to take 5 to 10% wins or greater. And the name of the game is just be in the game, show up to the party, and if you have the patience to hold a little bit, you're not usually getting burned. And when in that environment, I want to play these and I want to get in, I want to watch the stock and take my profits and not worry about maybe having missed out on profits that I could have taken. And that's something that other people ask me. They say, okay, Matt, well, how much time are you, because it seems like you spend all day, trading these. And that's true. You do. You are watching these. I'd say the three questions I get the most often are, what time does it start trading? How much is it going to cost? And, how do I know when to sell? The first one is you really don't know what time it's going to debut. You can kind of guesstimate that on the smaller low float ones, they usually try to get those out the door between 10 and 11 a.m. Eastern time. The more popular big name ones typically don't go live until about noon to 1 o'clock Eastern time. But those are very rough estimations, and you really do need. I sit here and I'm live trading them in my Reddit thread over here. You can see Reddit IPO Warriors. Join us over there. We're calling out the indication price. We're talking about where we're setting our limit orders. We're talking about kind of like, it's like pregame. If you like the Super Bowl, you don't just show up for the kickoff. You like to see the the parades and the pregame interviews and the color commentary, all that stuff. And I do get excited about these, and I kind of am mentally preparing myself and talking about what our strategies are, so that once the stock does debut, we have some idea of what we're going to do, or I have like a game plan before I start. The second one about the price, what's it going to start trading at? Well, that usually we can pick that up through various apps that we're using. Benzinga Pro is often giving us kind of news feeds on updates on what the indication price is. Sometimes they can get us a little hint on when it might start trading. And, we're keeping our limit orders either just above or just below, or, there's different entry strategies, but generally we're keeping our limit orders just above the indication price, so that when it does debut, we're just getting filled right away. That puts us in the position to, take shares in the optimal position condition that the stock just goes straight up. And this is especially important for the low float Chinese IPOs, the stealth IPOs, these ones that just go straight up and just go through a series of halts. So that's the second question. The third one is when to sell. Well, that's kind of up to you, but we've talked about a bunch of different strategies on this show. If you sign up for the newsletter at IPOwarriors.com, I'm kind of giving you a little bit more information on how I might play each one, usually with either a trailing stop loss or a target, 10%, or a target at, whole numbers. If it goes to 32, 33, if it started at 31 or 30, these kind of resistance levels. So that's where I'm usually trying to take profits. And those are what I like about IPO trades. Like I've said before, they take out the real question of, well, when do I enter the trade? If you're trying to learn day trading and you've never done it before, the biggest challenge is really like, well, when do I buy? How do I find stocks before they spike? Because you don't want to buy after the spike. With IPOs, the spike, nothing's really happened. You're buying on that spike on the debut. We expect there to be some premium from the IPO price to the debut price, but we're kind of getting in on the level playing field, and you're removing that decision from the equation. You're saying, okay, I'm going to start when it starts. Now I just have to think about, where do I exit? So, IPO trades have been very lucrative to me. They're kind of a simpler way to learn to trade, and the profits are, and the trading timeline is usually 1 or 2 days. So the last one is just stealth IPOs on the watch are GSUN and CPOP. It doesn't really matter what they do. What I'm looking for is Chinese IPOs with a low float of about 5 million shares and a price indicated about $4 to $5. They're almost always indicated at $4 to $5. And we're looking for specific underwriters. They're all kind of, and it's funny, they are associated with each other, but they're Bosted Securities, Sutter Financial, Network One Financial. Those are three of the ones that we're looking for. And I've got my, my Google notifications. I've got my kind of my checklist of different sites to look at. And every morning I'm looking at them, and when they show up, I'll send out the newsletter, let everyone know. So sign up at IPOwarriors.com, get the notifications, get the trading strategies, and let's go make some money with IPOs.
All right, Matt Hammond, IPOwarriors.com. Thanks a lot, man. Busy week. We had a very light week last week, but a busy week this week. I'm very excited to see how this all plays out.
Do any of these stand out to you as more interesting?
I haven't heard of most of them. I mean, I've heard of Monday, and that's pretty much the one that I've heard of. And like to your point, yeah, I mean, these are kind of like, if you're into it, it is kind of like a mini Super Bowl, right? For the ones that we've heard of, right? For the ones that that people know about and have brand awareness of. But for these other ones, like that Chinese education one is actually very interesting. That I'm gonna have my eye on that one because that space is extremely volatile. So thanks for bringing that up.
Cool.
Have a go.
Right. Thanks, Spencer.
All right. Have a go on, Matt. Matt Hammond, IPOwarriors.com. That's going to be a wrap for our show today. Please remember, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. Here is the schedule for the day. We've got live trading the open with David Green starting right now. We've got SPACs Attack at 11, the Power Hour at noon. All you AMC apes should probably tune into the Power Hour today because Matt Kors will be on the show. If you don't know Matt Kors, you're not an ape. What can I say? Matt Kors will be on as well as, and this is also a big get, Sandy Monroe. If you are into Tesla, if you are a Tesla, really, if you're a Tesla bull or bear, quite frankly, you should know Sandy Monroe. This guy probably knows more about Tesla than like 99.9% of people out there. The guy is a Tesla expert for the good and the bad, knows a lot about the company and the cars. He'll be on with Jason Raznick at 12:30 today. So a chock full hour from 12 to 1. We got Get Technical at 1, Moon or Bust at 2 o'clock. We got the At the Close show is back. We got Trend Spotter at 5, Money Mitch. Got a full slate today. We are back with our usual programming. Everyone, please hit that like button. And David Green, live trading starting right now. Everyone, good luck at the open. Good luck in your trades, and I will see you later.